Ladies and gentlemen, welcome to the roaring US economy. Robo-taxis officially launching in Austin. Consumer confidence up in a very big way. Trade deals being made and egg prices down 400%. We are having eggs for breakfast again.
Grocery prices are down. Everything. Remember eggs? We weren't going to buy another egg for the next 20 years. They were so expensive, right? Remember? You guys all hit me about eggs. Eggs have come down 400%. Everybody has eggs now. They're having eggs for breakfast again. But if you
Welcome everybody to the daily recap show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks were slightly higher on Tuesday as renewed US-China trade talks entered their second day after an upbeat initial meeting. And stocks were actually very red today. It was quite a volatile day. There were ups, there were downs, but finishing broadly in the green, led by the mega caps, excluding Microsoft, right? We saw gains here in Google, Meta, Communications, right? Very, very positive day. Nvidia and Apple, very, very green as well on the hardware space. We had Amazon up 0.3%. And then the best performer of the mega caps was Tesla, up 5%. And we'll talk about why a little bit later on in the video. But broadly speaking, very green day across the board. There was only one sector that was in the red. It was here, the XLI. I know the XLF shows a red box, but it was actually green on the day, up 0.12%. So there was only one sector that was in the red. Gold was kind of flat today, certainly a risk on day. The S&P 500 up 0.57%. And you can see at the top of the heap, XLC, communications, discretionary, and energy. Those are cyclical sectors, right? Those are this type of sectors you want to see at the top on a very bullish day. But all in all, we had sensitives gain, we had defensives gain. It was a broadly green and positive day for the market. In fact, the only red factor here was sort of like the mid-cap growth area. We did see outperformance from small cap value and just small caps in general, and that has been the theme for the last week. But all in all, a very green day across the board, large, mid, smalls, and it all stemmed off these US-China trade talks. Pretty much, we got a couple of comments from Lutnick. He came out and said, China talks are currently underway, negotiations going really well. Hopefully they end this evening. They may go into Wednesday. So we haven't actually got a formal announcement as to what the negotiations are going to entail because they're still ongoing. But the market took this in stride, really, really positive. In fact, the market was probably red, slightly flat on the day. And when these comments came out, markets ripped up like 0.5 percentage point just on the back of this. So, the market really trading off this trade news. Essentially, the market wants a really good China trade deal. And it does look like we are on our way to getting that. But it wasn't just positive news on the China front. We also got news here from Japan, and the Japanese economic minister, Akazawa, is going to visit the United States from June 13th to 18th for trade negotiations. And in fact, this came out in the pre-market, and futures actually started ripping in the pre-market on the back of this news yesterday. So we did get some very positive developments. If we can get a trade deal from China, the EU, and Japan, that is our biggest trading partners. And then we're all good to go from there. And that is why the market was broadly green. But we also had some very positive developments in terms of economic data. If we look at NFIB business optimism, beat expectations at 98.8 versus the consensus of 95.9. So small businesses feeling a bit more optimistic about the economy looking ahead. And then if we look at the Redbook Index, which is a weekly aggregate of retail sales, we look at this indicator every single day, up 4.4% for the week on a year-over-year basis compared to 4.9% the previous week. Very, very solid stuff. And the consumer not just hanging in there, but actually spending pretty well. And we know this is the case because when we got the personal income outlays, personal spending and personal income last month, they beat expectations. And generally speaking, that translates into higher consumer spending. And we're still seeing that ongoing. So tariffs not having an impact on the consumer just yet. But all in all, this led the S&P 500 to move higher. Now, looking at some market movers, Tesla was up 5%, and that's because there was some video coming out of the first robo-taxis live in Austin. I'm going to play a video right here so you can see it. The market absolutely rallying on this news. Guys, Tesla just about 6 weeks ago was at $225. Absolutely insane move off the lows right there. And I think this robotaxi news is going to propel the stock probably to the 350 mark and higher. Now, Walt Disney was up 2% today on the heels of Warner Bros. Discovery, ticker symbol WBD, announcing to split its business into two independent publicly traded companies. It's going to have its legacy media and its new media segment. Disney shareholders probably hopeful that something similar might happen with Disney Plus, parks, etc. And that is why the stock was rallying on that. IBM added more than 2% after the cloud software and networking infrastructure giant announced it's building the world's first large-scale quantum computer called Starling, capable of operating without errors. And shares of JM Schmucker sank Tuesday after the food producer forecast full-year profit below Wall Street's expectations. The company's result underscored a challenging environment for consumer packaged goods as shoppers pulled back on spending on items like Jif peanut butter, Milk Bone pet treats, and Hostess snack cakes. Schmucker also noted it would raise prices as tariff weighed on its coffee business. The stock was down 15% on this news. And then on other earnings news, GameStop was down 5% year in the after hours after it missed on revenue, beat on EPS. Revenue fell 16% for the year after GameStop officially completed its divestiture of its Canada operations, and the company also purchased 4,700 Bitcoin in the last quarter. The market obviously not happy with these earnings, down 5.8%. And guys, go and follow me on my second channel, FinFluential Media. We are going to have a full earnings discussion and breakdown of GameStop to determine if it's a buy right now, where's its fair value, and what does transforming its business into a Bitcoin treasury mean for the stock long term. FinFluential Media, it's going to be out about 30 to 45 minutes after the release of this video. And then for everything we saw today, there was 3,700 advances, 5,400 decliners. We saw net inflows in the New York Stock Exchange, outflows in the NASDAQ 100, and market momentum continues to gain strength. Guys, if we get one more positive day, we probably are going to go ahead and take the 150 and 200 day. And by take, I mean get above the 50% mark we had for the 100, 50, 20, and 5-day moving averages. So market momentum looking very, very solid in the shorter term and medium term averages. Now it's time for the longer term averages as we retake those all-time highs. Now guys, diving into the charts, you can see the S&P 500 was up 0.55%, but it was a very volatile day. We were very positive on the day. Multiple times we were negative here below the 0% mark, finishing up for the day. Very, very solid momentum. You could see that when we got the good trade news, the market absolutely ripped. So we're still, very optimistic about really fruitful trade deals for the United States. Guys, if you actually look at the S&P 600, up 0.66%, equal to the NASDAQ 100. So we continue to see outperformance, right, of the smaller cap space, mid cap space against some of the large caps like the S&P 500 and the RSP. But all in all, it was a broadly positive day. All of the major indices up more than half a percentage point. We also saw Europe was flat here on the day. China roughly up the same as it was for the US, because those trade deals probably benefit China as well. You don't want strained relations between the US and China. Volatility ticked down. Yields also ticked down ever so slightly, except the 2-year yield. And that had to do with some of the bond auctions we had at the shorter end of the curve today. But the longer end doing what you would expect. And I think as long as we're below the 4.5 and 4.9% level here in the 10-year, 30-year yield, I think the market's going to react very positively to that. The dollar kind of flat. Bonds gained ever so slightly, and that's really what we saw today. We saw, money going into bonds, money going into stocks, just US assets in aggregate, and coming out of gold, Bitcoin, silver, and WTI. So a little bit of a rotation happening under the hood. But now guys, diving into the S&P 500, very positive developments here for the market. If we just actually zoom in, you could see that the gamma flip, the zone right here, the put support and the call wall all moved up. However, the S&P 500 still trading at the top end of the range. Now, this is broadly positive because when you see these levels move up, right, it's telling us that the options market is saying, hey, we are actually going to move higher, but the market has already priced all of that in. And you guys know when we're at the top end of the range, this tends to act like strong resistance. Now, I wouldn't actually go ahead and get bearish right now because we're probably going to get a trade deal officially with China. The markets might rip on that, but it could be a sell the news event. But we're also going to get a trade deal with Japan. We know a trade deal with the EU is incoming, so we might get the trade deal with China, then Japan, then the EU, and then we go into earnings season for Q2. And it's like all of these catalysts just keep piling on. So I wouldn't get bearish right here. It does feel like the market wants these all-time highs. And again, if we take a measured move from where we closed to the all-time highs, we're less than 2% away for the S&P 500. But specifically tomorrow, right, what's actually going to happen for the market, it's going to depend on the CPI print, right? If we get an inline or cool CPI print, we probably will go higher. Anything that shows hot inflation, tariff fears, I think the market's going to sell off on that. So in the pre-market, look at the CPI print. Follow me on Twitter. I will give you the most up-to-date and quickest update on where the CPI print will be. That is what the market is going to move on tomorrow. For the S&P 500, the NASDAQ 100 as well, everything is going to be determined on the inflation data tomorrow. Again, in line or cool, we go higher. Anything that shows a hot inflation print, and things are not going to bow too well for the markets, because a hot inflation print means that yields are going to actually move, and then it's going to give the Fed a little bit of pause in terms of what to do next, maybe potentially pushing out a rate cut from June to July, July to September. And the market doesn't really want that, because we know that this is not a 4.5% Fed funds economy. That being said, guys, don't try and predict what's going to happen. Just react. Wait for the data and then follow the market. Now, looking at the RTY, we also did see the gamma flip zone move up significantly to the 2,200 area. Small caps have been on quite a tear. We've broken above this key zone, sort of like a mini breakout, as well as above this high right here. I think we probably are going to go to this 2,200 area. So it does look like there's like what I would say 50 points, 60 points of upside from where we actually closed previously, and still massive upside, like 10-12% to get to these 52-week highs. So yeah, I think small caps looking very, very strong. Again, if we do pull back and find support here, that'll just be trend continuation to the upside. And man, if we get a cool inflation print tomorrow, yields are going to move down. That's going to be more fuel for small caps. So guys, keep an eye out on the CPI print. That's really going to move the market tomorrow. Now guys, gold looking flat. The trade, we're sort of trading this triangle, looking for the next move to the upside or the downside. My bias is to the upside, but obviously you'll trade the plan as it comes. Now, Bitcoin continues to do exactly what we think it's going to do. Bitcoin was down about 0.27% today. However, the trend is still to the upside. We will continue to make a move to the upside here in Bitcoin, and we are setting up really, really well to go ahead, retake these highs, and continue the move to the upside here in Bitcoin. Guys, I said to get long in a very big way when we were at these lows. Those that followed me into the Bitcoin trade, you would be up very close to 40% in about 5 weeks. Absolutely insane. Not even 5 weeks. Absolutely insane. And we're going to eke out about another 20, 25, 30% gains from where we are. You can see M2 money supply is sort of stalling out at these highs right here, but rocket fuel for us to move higher. Don't focus on the day-to-day, focus on the longer-term trend, guys. And then let's quickly look at some of our parameters for the market, guys. This is the 10-year yield. It does look like the 10-year yield probably wants to move lower. If we get the correct data tomorrow, if we get cooler than expected inflation data, I think we're going to see 10-year yield unravel and the 30-year yield will follow. And then we probably will get our rate cut from the Fed in the next FOMC, which is, I believe, on the 18th. So a lot is dependent on tomorrow's CPI print. We also know that Donald Trump is pressuring the Fed to go ahead and cut. And then looking at dollar, we probably are going to move higher from here in the dollar, especially if the Fed goes ahead and cuts and we get that budget bill. We should see a little bit of strength in the dollar. So I wouldn't be shorting the dollar right here. I think this is probably the place where you probably want to get a little bit bullish on the dollar, aiming for probably the 101 area, and then at the upper end, the 104 area. Guys, and let's talk about sentiment. This is Goldman Sachs US Equity Sentiment Indicator, which combines 9 measures of positioning across institutional, retail, and foreign investors, and has historically been a statistically significant signal for near-term S&P 500 returns. And essentially what it tells us is how are investors across the board positioned from the same time last year. And you can see we are still in light positioning. In other words, as we approach all-time highs, there is still a lot of dry powder, a lot of the institutional side, a lot of the foreign side need to get onto the right side of the trade, and that can provide firepower for us to move higher. So even though this is in light positioning, this is more bullish than it is anything else, because it is an indicator based on positioning and less so on sentiment. And the reason why we could actually see this move from light positioning into stretch positioning is because earnings estimates continue to rise. S&P 500 forward EPS estimates hit a fresh all-time high at $280 per share. You could see here at the Liberation Day tariff announcement on April 2nd, we were looking at $279 in earnings per share. So essentially, EPS went up $1 from the same time last year, driven of course, by tech and communication services earnings. However, absolutely insane. On April 2nd, right here, if you had told me earnings per share would be higher in about 6 to 8 weeks, I would not have believed you, but here we are. But what's also driving earnings is in fact S&P 500 buybacks. Guys, Goldman Sachs forecast for buybacks is over $1 trillion in 2025. We're looking at about 5% growth from 2024, which was 13% growth from 2023. So very, very robust buybacks. And that will also provide us more firepower to go higher, because this does improve earnings per share, but it also helps overall market liquidity. Now, guys, everything is always going to come down to the macro, and this is a very, very interesting chart. This is the price of the S&P 500, and then we have the hard data right here, the green and the soft data. And pretty much what we generally see is that we have seen the soft data rebound while the hard data has remained pretty steady. Now, the hard data has come down because, tariffs do have that impact. But generally speaking, what this data is telling us is that the soft data typically bottoms before the hard data. And so even if we do get like a whole bunch of poor data this week, next week, that doesn't necessarily mean stocks are going to completely fall apart. In fact, the data is telling us that that probably means we are near the trough in the hard data. And that's actually more firepower for us to go higher. Now, let's actually talk about the data for the rest of the week. Here, Wednesday, the 11th of June, we have the inflation data. This is going to be extremely, extremely key. I think we are going to get a relatively cool print, just because if you look at trueflation leads CPI by about 30 to 45 days. So we should get another cool print, and then we should see sort of the more hotter prints come after this one. However, when we actually look at the forecast, if we look at the core month over month, we're looking for 0.3. If we look at the month over month headline figure, we're looking for 0.2, and that should materialize in a 2.9% and 2.5% year over year figures. And then on Thursday, we get the PPI. For those of you that don't know the difference, CPI is the inflation you and I pay. PPI is what like businesses pay. So if we get these data points right here, that should be good. I think anything hotter and the market can freak out. But like I said, even if the hard data was to come in a little bit weak, the market generally looks past it. And that would often signal to us that we're closer to a bottom than we are to a top. Earnings for the rest of the week. Tomorrow, the biggest name is going to be Oracle. That's about it. Chewy before the open, but yeah, really it's going to be centered on just Oracle. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.